Who's the maverick and who's the goose, since we're talking about the
he's
wing
the maverick.
He's the maverick.
You're both pointing at each other.
I think we have more conversations with each other than our wives.
You've known each other longer than you've known your wives, so it makes
That is true.
kind of makes sense.
That is true.
People talk about the Flipkart Mafia and all the startups that came about. I think
You're part of the mafia.
I'm saying
I think it's the startup university.
Still are.
Equal number of good decisions and bad decisions.
Yeah.
But the fact is that looking back, vision is always 2020. And I think we have that advantage building PhonePe after having seen the Flipkart journey.
I want to have the ability to look somebody in the eye and say that I have a clear path to profitability before I can say that I will IPO.
I think the business is in a good place, the org is in a good place, the sector is in a good place. If you're a market leader in the growth sector, I think it's a good time.
What are the top 3 things that you would tell a young entrepreneur today, which you believe are the non-negotiables?
If you're a first-time entrepreneur or you're below 30, you gotta swing for the fences.
And so how soon can we expect PhonePe to build from India for the world?
Ask the CTO. It's India's time to build for the world.
How do you look at competition?
Shamelessly, I think in our sector over the last 10-15 years, the most innovative by far and away has been Paytm, and we talk about this.
Yeah.
Right to win comes in from how we execute, but the right to play comes in from whether we have the building blocks to be able to enter a new business, even if we are entering late.
The Tatas and Pio, I see the Birlas or the Ambanis or more recently the Adanis and the Mahindras. They have things that every new business can take for granted.
Hello and welcome to the Young Turks podcast. I'm Shereen Bhan. We're here in Bengaluru to talk to someone who bet on India's digital ecosystem well before India had its UPI moment. Digital payments was where it started, but the story of PhonePe is more diverse than that, and they're attempting to build it even bigger. Joining me now to talk about PhonePe and the road ahead and that much talked about IPO, Sameer Nigam and Rahul Chari. Gentlemen, thanks very, very much for joining us here on the Young Turks podcast. I'm going to start with exactly that. You on stage in August of 2024 said that I want to have the ability to look somebody in the eye and say that I have a clear path to profitability before I can say that I will IPO. Can you look me in the eye and tell me what's changed today? What gives you the confidence of wanting to go for an IPO today?
I'm not sure I said exactly that, but
Paraphrasing, but broadly that.
I think the profitability part of it, we shared our annual report for FY24 already, and we were adjusted PAT positive for the first time, so I'm very happy about that. I think directionally too, I think the company's at a stage where I feel like the core payments business, consumer and merchant combined, is at a stage of maturity and market leadership where we should, hopefully from here, remain sort of very, very stable and hopefully quite profitable in years to come. Conditioned well enough to say without setting any targets or goals. I think it's the right time. I think the business is in a good place, the org is in a good place, the sector is in a good place. Payments is still growing very rapidly. So if you're a market leader in a growth sector, I think it's a good time.
So Rahul, did the two of you sit and have a conversation about it makes sense to do it now, this is the right time, this is the moment, and we should go all in?
Oh yeah, we have a conversation about everything. I think we have more conversations with each other than our wives.
You've known each other longer than you've known your wives, so it makes
That is true.
kind of makes sense.
That is true. No, we did have a conversation. I think like Sameer mentioned, just given the current state of the org and the business, specifically on the core offering that is payments, given how exciting financial services and payments in India is, and the fact that we also have a few new businesses that we are diversifying into, we felt that this is the right time where the core business on the path to profitability, being able to actually nurture new businesses, is the right time to take PhonePe to the public markets. It is also a reflection of our maturity as a company from a compliance and governance perspective, that we are ready to actually take on this larger role. So yeah, we did have the discussion and felt that it's perfectly the right time to actually push forward.
I think we knew that we'd want to actually eventually list.
Because I
Few years back, because we moved to India with that whole view.
Exactly. I mean, to pay a hefty bill of 8,000 crore rupees to reverse flip and move back to India, I would imagine had its roots in this eventual decision, right?
Of course.
I think directionally, if the right answer for a business like ours is to list, then this is the right market. I mean, I think we're very proud of the fact that we are a household name or brand in the country today. It doesn't make sense to list anywhere else. So I think the reverse flipping was a precursor towards an eventual listing someday.
But, I want to understand for the two of you, what's the motivation to list? I mean, we've had this conversation with several founders. Some have decided to go the IPO route and some have decided not to go the IPO route.
Sure.
Another one of your peers next door, Zerodha, choosing not to go down the IPO route, even though that is a very real possibility for them. What is the motivation to IPO, besides, of course, providing exits to whoever would want an exit?
So I think that last part is a big motivation for companies like ours that actually have outside investors. So Zerodha is a good example where
They have
wildly
one.
profitable,
Yeah.
and the family owns the entire company. So I think they can get the liquidity that they desire through dividends, but more importantly, they can keep investing in the future of that company also through their bottom line. We took a path which is, well, the sort of tried and tested path of getting outside in capital.
Yeah.
And it's also a very fiercely competitive market when you're actually trying to build on microtransactions at population scale. So we needed that capital. We didn't have it. So I think in this case, you have to have a steady liquidity environment, not just for us, employees, shareholders, current and future. I think that's one part of it. We're blessed. We don't have a rush on that front. We have the money to invest in all the businesses that we need to. We have really good investors, both. I think for us, it's more the nature of our business. We're just so heavily regulated across all the financial regulators now.
Yes.
Wanting to operate not just in payments but in other sectors also at population scale. I think the governance the stamp that comes with public governance standards is a higher order stamp than being privately governed. I think that's a big reason.
So, do you believe that because you're now regulated not just by the RBI but also by SEBI, and of course the insurance regulator as well, since you're now in the insurance business as well, that this need to IPO kind of gives you the added legitimacy as well?
I think that's the right word.
I think it's not just the legitimacy, just given the scale that we operate at on the payments business that is regulated by RBI for sure, but also on the other businesses, the scale that we expect to get to. It becomes more of a responsibility, like moving back to India, having a jurisdiction in India was one aspect of it. But going public, I think, becomes another responsible action by the company in terms of ensuring that being in the regulated space, we're taking all the right steps to give confidence to the regulators as well as the public, who have placed the trust on us and our platform, that we are the company that we stand for. Yeah.
But could you not have IPO'd even if you were still domiciled in Singapore? I mean, it doesn't stop you from listing in India. It does come with added constraints, but was that ever a consideration?
Not for the two of us.
No?
So when we started PhonePe 10 years ago, we actually had incorporated here. It's when we merged with Flipkart.
Yeah.
Because they were domiciled in Singapore, we became a sub there. I think to Rahul's point, we want to play in financial services, not just in payments, but in lending and insurance and broking and whatnot. And I think these are all not just sensitive sectors. These are, I think, sectors where the regulatory norms and the laws in every major economy in the world require you to abide by them.
Yeah.
And I think there's an expectation that you will list in that like sort of home market. So I think from the governance standpoint, the argument for the IPO, it just makes so much more sense in India.
Yeah.
I think even in terms of creating shareholder value, the number of my extended family members and friends and others who come and ask, hey, can I ever buy PhonePe shares? That's what I want to solve for. If you're going to create shareholder value in the public market, I'd rather create it in home market, right? Why would I actually list and open up to HNIs and retail investors or DIs in some other market. I don't want to. I mean, there's no
I think we are a company, we take a lot of pride in the fact that we are a company that has been built in India for every Indian.
Yeah.
And used by quite a few Indians, right? Our ambition actually takes us to say that we'd like to be used by every Indian. We always talk about population level scale. With that, I think trying to take any other route, if we are going to be a listed company, I think falls short of the expectations we have set for ourselves and for the company, really. So we love the fact that we are a product that is recognized, used and trusted by so many Indians. And in that scenario, to actually list outside versus list in India, I think it wouldn't be as much fun at all.
So made in India, by Indians, for Indians, that of course is the ethos as far as PhonePe is concerned. But since we're talking about expectations, let's talk about the timeline. What is the likely timeline as far as the IPO is concerned? What's this process been like of putting everything together, preparing yourselves for an eventual listing?
I can't, unfortunately, speak to the timing just yet. I think we're working towards it, and I think we've said that formally now. Sometime in early Feb, we got the approvals that we needed from our board to start the process. It's been an interesting process, to say the least. I mean, just all the scatter-gather of all the paperwork and all the participants. It's been it's like launching another startup. So we're enjoying the process. I think like everything else we do, we go a little slower, but I'd like to believe a little more purposefully about the process. We're trying to make sure that we cross all our T's, dot all our I's, do it slowly enough. That's why I'm not putting a timeline to it.
Sure.
Hopefully not too far away, but I can't say yet. And before you ask me about valuation, that's a discussion that's not even started. That I'll answer after we're done with roadshow, somewhere down the line.
Okay. I'll address the valuation question differently with the both of you. Let's look at the listed space today, right? Eternal, which is essentially Zomato, which is food aggregation, plus now Blinkit, which is e-commerce, is way above at 26 billion. You've got PB Fintech, which is insurance, now some part of health at 9 billion. Swiggy at about 9 billion. Paytm at 6.5 and MobiKwik at about 250 million. Given where you find yourselves today, with, of course, payments continuing to be the lion's share of your business, but now the diversification into insurance, into mutual funds, into lending and so on and so forth, how do you believe the market should perceive you? What should the market treat you as? Because you're a little bit of everything that I just spoke of, or attempting to be.
I'd like the market to think of us, first and foremost, as a pure play consumer technology company.
Okay.
Everything we do is bound by that one singular sort of ambition of building platforms for consumers. Second, with the one exception, I'd say, of share market, where they're required to have a website almost, everything we do is on the mobile, which goes to the brand of PhonePe as well. I think if we are able to identify either a really large problem or a really large opportunity that can be solved at a very high level purely digitally, we'll go after it, is how we sort of explain our ambition levels or range to our own investors and board today.
So that's the opportunity, but that's also the boundary then.
That's why it's PhonePe, right? I mean, it's anything on the phone, right? Because I think there's conventional thinking that if you went from payments to, say, lending, that's natural, or if you went from insurance into payments, or I mean, there's brokers here who are getting into payments. Just because it's sort of in the financial sector, everyone assumes that, okay, kumbaya, this is all like, these are all cousins. Similarly, if e-commerce and payments, e-commerce companies get into payments, people assume that, okay, there's a reason. Everyone from Zomato to Tata to Flipkart to Amazon's got into payments. So I think payments actually is at the center of the economy in so many different ways. It depends on what you can see, right? I mean, range of vision. So there's a reason why we believe, for example, over a 5 to 10 year journey, Pincode could, for example, be very, very transformative. Now, is it counterculture to actually go non-inventory and digitize offline retailers who've always sort of been told, and you guys are cavemen, the world's moved digital and all? Perhaps, but imagine if you could. Imagine if you could build a software stack that could connect offline stores with the same set of hundreds of millions of customers that we have at PhonePe today. I think for investors looking at PhonePe, past, current, hopefully in the future, I'd like for them to look at us as a company that's ambitious enough to solve really hard population scale problems, but stay true to the sort of technology first and possibly technology only worldview. I'll end by saying I think what differentiates us compared to a lot of our peers in the payment sector is we are very, very comfortable putting tens of thousands of people on the ground as well for our merchant sales force, for our lending collections and other stuff. So we have that sort of dual DNA. I think Zomato has that. Very, very good web offerings or mobile offerings, and then a large fleet. So I think that's, I don't see that often in the financial services space. Branches, sure. Field operations, no. And I think we do that well.
So since diversifying into all things BFSI was largely motivated or driven by you, Rahul, let me put the question to you then, because these are questions that will be asked on your roadshow as well. In terms of the opportunity to grow, what's the kind of headroom for growth that you see in each of these businesses? They're nascent today. What could they look like 5 years on? And how much money are you willing to risk putting into these businesses before they turn profitable or significantly profitable?
I think just because we are in the IPO process, sharing anything from a forward-looking perspective, numbers would be difficult. But look, if you look at the payments business and payments being such a large population scale offering, all the adjacencies on the financial services side, be it lending, be it distribution of mutual funds, be it even insurance, distribution of insurance, they all feed off the data fire hose that payments kind of creates. Right? So what we do have as an opportunity is the fact that, one, our data gives us significant amount of insights in terms of who would be the right set, the sub-cohort, which itself is significantly large because of the sheer size of payments, that needs a certain kind of insurance. What is the life stage they are at? From a lending perspective, it gives us great signals in terms of both credit worthiness as well as their intent to pay back. So that gives us an opportunity to become what we pride ourselves as, is a platform that can be an intelligent distributor.
Okay.
So we've always tried to stay away from being a manufacturer as far as possible, but partner with the ecosystem in terms of being an intelligent distributor, which means let's not just be another lead generation platform,
right,
but let's be a platform that is clearly looking at what kind of problems can be solved by a particular partner for which kind of users, and make sure that we are able to actually surface those products at the right price to those consumers, so that we are actually value additive to both the consumer as well as the partner. So if you take that, and you take the fact that with this, we're able to actually then take these financial service products to a very large set of the population which otherwise would not be reached. Or even if did reach them, it would be at a price that would be prohibitive. That's the kind of role that we play. From a size, I think just because of the fact that payments reaches practically every Indian, our opportunity to create out of that cohort multiple Indias that deserve different kinds of financial services products, that's the opportunity. So that's what really excites us, right? Even in insurance, we've taken the path of trying to actually build out insurance distribution purely on the digital platform.
Right.
We've seen success with two-wheeler and four-wheeler, and we hope to replicate that how much of a time it takes on health as well as life. Today, we believe that the traditional modes of selling insurance are broken for a variety of reasons. They are either selling the products that is the easiest to sell, not necessarily right for the consumer, or it's being sold through the physical channel where the commission dictates which is the product that should reach the consumer. We want to solve for both, which means that get the right products and get them at the price that is right for the consumer. And that can be done only if you potentially take the digital-only route let data dictate the terms, and then let the consumer make the choice. So I think that's really the opportunity on financial services.
The opportunity on financial services, but I also want to understand from you the opportunity as far as Pincode, which is more your baby, and how you see that playing out given the competitive landscape that we're seeing, and also the fact that this requires a significant amount of cash, does it not?
I think we are trying to prove that it should not. And I think that is the hardest part of the challenge itself, right? So what's Pincode trying
How's that going?
It's going well. I think the market and or media, when I talk to people, expects to hear answers which are anchored sort of on growth trajectories like a Zepto or a Blinkit and others.
Yeah.
But we are a year and a half in. We spent the better part of the first year dabbling with ONDC and third-party seller platforms. And we were very transparent with both the seller platforms and ONDC that we were evaluating tech stacks and partners. And unfortunately, they fell a little short of what we believed it would really take to digitize offline stores really well. So going back to what Pincode's trying to do, we are saying, hey, there's a national supply chain that reaches the last mile in every city in India.
Yeah.
Goods already reach there. The pricing is really attractive. It's not like natural. The MRP doesn't change from a dark store to a white store. Capital being used to discount prices lasts only so long. We've seen the e-commerce cycles play out. Ultimately, you have to make money. So when you take the price discounting out, it's really the quality of service that they offer which is better. And the ability to actually find a large selection. That's the thing that digital platforms do better. But the model is to reinvent the entire supply chain. And I think the same is happening with quick commerce. I mean, there's dark stores in every neighborhood next to the retail stores, right? And I think what we are trying to do is say, hey, again, just like our insurance approach, can we go in there and build every single piece of technology required for a store to become real-time available?
Okay.
And I mean scanning your barcodes to get a digital catalog, and then having a pick and pack app, and then having an app integrated with third-party logistics, and having a full ERP so that all your orders go through this ERP and you know what inventory you have. And these are the real problems on the ground. They're not fun. They're very hairy problems to solve because every store has a different level of capability.
Yeah.
But I think what gives us comfort is the fact that we can do these as skunk projects at a low-cost basis. You can work with 5 stores for 6 months. See, I think where we are blessed, again, going back to one, quality and patience of our investors and our own capital efficiency, we have the reserves to go slow and do it right. We're not rushing to our Series A and B and C. These are all businesses incubating within the umbrella. Quite like multi-platform players in the West.
But this is not a skunk project for you.
Oh, no. I'm just saying that each of these experiments of trying to integrate a pharmacy store or a network of pharmacy stores in one pin code in Bangalore, while I'm separately actually experimenting with, say, florists in Pune, I can run multiple experiments on the cheap. That's part of the reason I think why we're very excited about things like Pincode or in this. I mean, you don't have to start with a winning hand, but as long as the market's large enough and you have time, you either need time or capital, right? If you have both,
Do you have both in plenty at this point in time? Do you have the luxury of time? You have the capital.
We have the luxury of time simply because we've always chosen that path. It's tried and tested for us. We entered lending late. It's actually amusing me. In fact, nowadays I read a lot of these articles that say, yesterday I saw one that says, PhonePe missed the boat on lending. By the way, they avoided all the early sort of pain of the regulatory...
Have you been too conservative? Have you heard that?
Yeah. But they got lucky because they avoided the early regulatory sort of changes or flux in the system. I'm like, no, that's precisely why we waited. We want the market rules to sort of settle down enough.
Yeah.
We're just more conservative, and that's okay. I think it's okay to know yourself. Now that, say, DLG is allowed, we'll play with DLG. If DLG is not allowed, we won't touch it. If you're not ready to do lending and do it end-to-end, we won't get in. And that's okay. I mean, we got in, year 8? By year 4, our investors were asking us, when do you plan to get in? And we said, when payments makes money. And I think that's the right answer. And then maybe someday, soon, hopefully, payments plus lending makes money. Like, it's just about how many more are adding to the bank and how many are subtracting, right? I think that's the...
And we take that approach with every category, small or large. I think one big difference that also sets us apart is we don't do as many things simultaneously as a lot of our competition may be doing. But whatever we do, we...
Really, at this point in time, how many fires are burning?
all of the things that we do have built up over the last 9 years. This is our 10th year of existence. Yeah. At any given point, we are incubating a few businesses, adding a few categories, and going as deep as possible. And we give each of the categories time to actually mature, get to a product market fit before we put marketing dollars behind it.
Okay.
In terms of financial services, the good part is that it's not incentive driven. You can't give incentives.
Yeah.
It is a business that is dictated by distribution strength, which we have thanks to the PhonePe app. It is dictated by in every step, for example, lending. Whitelisting the right set of customers for a pre-approval with our lending partners. Helping our lending partners with setting up the mandates, which is again a strength that we have thanks to payments. Repayments, again a strength that we have thanks to payments. And collections. We look at all the building blocks that it takes to build the business. We evaluate whether the IP that we have already created or the data that we have plays an important role or not. That becomes a decision to enter a business.
Yeah.
Because that's our right to play.
Yeah.
Right to win comes in from how we execute, but the right to play comes in from whether we have the building blocks to be able to enter a new business, even if we are entering late. And then we actually say that, do all of these add up to value for both the consumer as well as the partner that we're bringing on board? If those questions are answered, I don't think we really let market or time, in most cases, dictate when we actually launch and when we amplify.
I think there's learnings from the sort of conventional family business houses or the big ones, right? If you see
good ones or
the good ones.
Okay.
I mean, if I see the Tata's empire, or I see the Birlas or the Ambanis, or more recently the Adanis and the Mahindras, they play across so many sectors. I don't even mean verticals, like sectors, right? They all started with one that started making money, then built the second, and so on. But I think they all also have a common infrastructure. They have common corporate services. They have things that every new business can take for granted. Your starting point is also further along. It's not like Pincode is starting zero base. It's not like Indus or lending or insurance is starting zero base. The building we are in is available. The cafeteria is there. All of the HR and finance and other functions are around. So if PhonePe is 10,000 employees, there's the standalone PhonePe payments business would have needed, say, 1,000 people in the corporate functions. The incremental cost of 5 other business projects, maybe just another 100 or 200 on top. So the cost of incubating new platforms is also lower. Where it spirals out of control, if we decided to say, play the quick commerce game right now, I'm seeing the cash burn happening in the market. If we decided to play the quick commerce game with the cash discounting coming into play, then there's no end to it. Because then you're going after market share. You're not necessarily...
So you draw the line there.
I think we've only once, and for a period of about 18 to 24 months, fought that battle. I think we got seduced into it somewhere around 2018 in payments. This is when Google and Paytm and Amazon Pay and others, everyone was going ballistic with cashback. We entered, and I think hard date, December 31st, 2019, we just said we are done.
Cold turkey.
We had we literally, like, we was burning $10 million a month. And we spoke to our board and said, we're going to test the metal of our product. We just went literally cold turkey, like just stopped on the first. The partners were upset because we were fueling cashback for the ecosystem as an industry.
Yeah.
The entire industry was spending. I'm seeing that cycle still repeating out.
In quick commerce.
In payments
In
today.
payments.
I mean, now it's the new players who are doing it, right? The Navis, the Super Moneys, the Creds. The new players are doing it. There was a phase where Paytm and us and Google Pay did it. There's a phase where the wallets did it. So we did. I'd be a hypocrite to say we didn't play that game. We played it for the first platform we were setting up. Luckily, as Rahul mentioned, in lending, you don't have to discount. It's a category that always makes money if you play it right. Same with insurance, same with broking. So financial services anyway, luckily you don't have to burn cash. Commerce, you could theoretically burn cash. I've seen it now for a while. Not the game we want to play. We won't be playing to our strengths. I think the issue is that it's not that we can't.
You don't know how to burn cash, is it?
No, it's not that we don't know how to burn cash, and I think we could get it if we wanted. I'm pretty confident. It's not the game we want to play because that's not value chasing. It's valuation changing, and that gets screwed up in the public markets very quickly.
Yeah, we've seen that happen.
And
it has to happen.
I think the right thing is we know how not to burn cash and yet keep growing in a hyper growth market. And I think that's very important. We do use data very, very intelligently to ensure that, one, there's minimal cannibalization when it comes to any sort of incentivization. And even from an incentive perspective, if we are to do it, is it going for the right reasons where the consumer that you're acquiring is structurally sound and has a long-term value to the company? If we do it in a manner where it's purely to increase the transaction value or volume and does not bring any structural goodness, I don't think we are a platform or a data company. So I think we take pride in the fact that we do spend on the right set of users for the right reasons that creates long-term value for the platform and the company. I think that's how we look at it.
If I could pick up on what both of you are saying and the example that you gave of how we've seen this conglomerate model as far as large legacy companies are concerned, is that the ambition of creating a digital conglomerate? I mean, the organizational structure certainly seems to suggest so.
I mean, I think one thing that both of us and a third co-founder, Boris, and we are very clear about, when we started PhonePe, this was not our first gig together. This is a second or third stint together. And we're old entrepreneurs, so we said, we want to build a legacy company. We don't want to be valuation chasers. We want to be legacy chasers. In that, we want to create an institution that outlasts us. Multi-generational is not a word you hear in the consumer tech space.
No, you don't.
So we said we want to try and do
a multi-generational great company.
Yeah. In the consumer tech sector, how many are there? In India, we've not seen too many yet. It's also early innings. But I think the VC model and multi-generational don't go hand to hand in a market like ours because promoters get diluted out very early.
Yeah.
And on the other side, the cash burn to actually cater to 1 billion people is also very high. I mean, it's both. Here, that's one of the reasons why capital efficiency is a key focus for us. If our ambitions can allow us, or our approach can allow us to have the cash flow get generated to fuel our own ambitions while founders are running the company, and then the next set of CEOs who are there for each of the business, they can actually carry on with the same. There could be an outcome 10 years from now where the business stands on its own legs, and I think outlives and outlasts short-term or medium-term imperatives and just creates long-term value. And that'd be really, really cool.
Does it help? You talked about VCs and very often we've seen this sort of play out. You bet on the short term as opposed to betting on the long term. And we've seen that sacrifice being, and it's a fine balance as well. But does it help then to have, Walmart parentage in that sense?
It definitely helps. I mean, they're 70 years in. They're massive. They're public. Family still got a very large share of Walmart. So in that sense, I think they're as patient capital would get in this space, right? So that definitely helps. I think they themselves have invested into multiple markets where they've taken long positions. So they're invested in that sort of long multi-generational play automatically. So that definitely helps. I think there's a meeting of the minds there for sure. Much more than we would have had if we were talking about early stage VCs, especially during those cycles where there's hyper growth, right?
Yeah.
It's very hard telling a VC who's put a third of their fund in your Series D, I'm going to stop Cashback tomorrow because I want to test capital efficiency.
You wouldn't have been able to do it.
You wouldn't, because they'd be like, but I'm all in. I'm like, but I want to get all out of this game and play the long game, right? So I think it was the right time for us to actually get more sort of sovereigns and strategics in. We have Microsoft on the cap table. We do a lot of work with them. Qatar, Tencent, GA more recently, TVS. I think all of them are very, very patient. So I think, and it's a cozy small cap table today of very high quality investors. So I think they allow us, as long as, again, We demonstrate that we are bottom line focused. They allow us our experiments on the top line quite happily, and that's a great sort of combination.
But, does it worry you? Does it concern you? Because we're seeing this play out at this point in time of how companies are going to be viewed as far as their foreign shareholding is concerned. And, whether there is likely to be any regulatory change, any regulatory pushback. We're now seeing both Zomato and Zepto try and bring down. Zomato has brought down its foreign shareholding and domestic ownership is now higher. And Zepto's attempting to do that. Does it concern you? Does it worry you? Is it somewhere there in the back of your mind?
Well, there's a decent amount of noise around it, has been for the last decade, not just in our sector. If I really zoom out and look at it sector agnostic, I think for India to be globally competitive, we will need to compete with global players. So there's going to be an FDI entry route. Now the question is, am I competing with Google and Amazon and WhatsApp only, or is capital coming in? I don't think you can have one without the other. So I think we'll have to make a choice as a market. Do we become insular or do we compete? And I think for the last 15, 20 years, they've chosen the path of compete.
Yeah.
So to that end, I think this is irreversible, and I think we're better off for it as a market. I think the only limited concern that I have, obviously, not an ostrich, just looking at the world, I think there's a global trend against globalization right now.
Yes.
And I think that's the only one that I'm a little worried about. But I'm an optimist. I think this is cyclical. I think once people have met across borders, across shores or whatever, I don't think you get enough of each other. So I think the market will keep opening up from here.
I think India, for its scale of population, diversity of population and diversity of problems, we should take a view of what allows us to leapfrog the lack of infrastructure in the various domains, segments that we have, and choose the path that allows us to get there the fastest. Within that frame, if there's a choice to be able to say take local capital versus foreign capital, I think it makes sense.
Yeah.
But to actually elevate the conversation about capital and investors being local or foreign, at the same level of whether the problem to be solved for is right or wrong, I think is that's the issue. So if local capital is not backing companies that are cutting edge or in the consumer tech space because they don't understand potentially the value that consumer tech can create over the long term, it is a high investment upfront with returns over time.
Yeah.
Further aggravated by the fact that in the consumer internet space, India is a high volume, low ARPU play, low average revenue per user. So you need to actually build that scale, which means it costs even more. If local capital is not filling for the requirement that is needed for us to leapfrog, I think the choice should be to also take foreign capital. So the conversation should not be about whether a company is locally invested or invested through foreign companies. It should be about whether they're solving the right problems for India. And within that frame, is there a possibility to actually perhaps move towards a cap table that is more and more local if needed by regulation or any other reason? Yeah.
Well, speaking of regulation, the other overhang, of course, now pushed out to 2026. But you've lived with this for the last many years. It's a 2-3 year cycle that keeps playing out. I mean, how do you deal with this? Are you now working with the fact that, look, we'll wait till 2026 and see what happens then? Or are you working with the fact that, look, we've got to be prepared for 2026 to actually happen?
I wish this were an app update that I could sort of work on, right? Some of this is just because the deadlines are cyclical, some of the build-up is. I'll say this. I think because this was the third cycle that just finished in 24 December, and because I think there's also, I think the media really starts dialing this up as you get closer, right? It's almost like this...
Are you not checking your WhatsApp every few days?
No, actually we don't.
And
I think honestly, the ecosystem has become it. I genuinely think that media, because NPCI was reporting monthly numbers for all the players, unlike a lot of other segments, the attention to the leaderboard on UPI. I mean, right now I see people reporting this person jumped to number 7 and that one jumped to number 9. It's like,
Yeah, because 1 and 2 is done and dusted.
no,
So
but can you tell me, e-commerce is a decade older. Could you tell me who the number 7 and 8 player in e-commerce are? Could you tell me in food tech? Could you tell me in cap tech?
Or
Could
do
you
we
tell me
even
in any
report
sector?
it?
You can't. Now the point is, because the data is there, it's a talking point.
yeah.
And because they put this cap circular out, it's a larger talking point. I think this time, I think the comfort that we got, the comfort we were seeking was when we spoke to the policymakers, the regulators, ecosystem.
Huh.
I think one assurance that was provided was that whatever they do, I think there is a desire by the regulators to actually create a more diversified market. I agree with that.
Sure.
The fact that that burden is somehow falling on us did not sit right by us, and we express why. I mean, it can't be the entrepreneur's burden to actually reduce market share, and I think they agree with that at some level. But I think the approach to then get past this impasse has to go from circular to something else, and I think that broad understanding after 4 years of dialogue has happened, and it sort of is translated into two things. One, everyone's agreed. No matter what happens, you don't hurt the customer. Not PhonePes, not GPays, not Paytms, not the 10th persons. You just don't hurt the customer because payments is sacred. Second, newer players have to stop calling themselves smaller players. You're small because you're new. And if you want market share, you can't just say, I want that. You got to earn it by differentiation.
Yeah.
And I think even Dilip at NPCI said this now. I think people need to give users new reasons
To move.
buy their toys.
Yeah.
So otherwise, it's aggregation theory, the rule of three, or whatever you want to call it. If these are free apps to the consumer and there's 100 of them, over time you have to trust consumer choice will converge around the best 2 or 3. That doesn't make the 20th app or the 25th app disadvantaged. That just means in perfect competition, you didn't prevail. And in the context of sort of this overhang, I'm hopeful before 26 arrives this time. There's been so much discourse around this publicly, privately, at the ecosystem level that I think they will unleash, hopefully, the next wave of innovation on basic interoperable UPI paradigms. You need one QR in any app to work. You need one app to work. Beyond that, everyone should be able to innovate. I think because of the cap, what's happened is innovation significantly slowed down. Because now what's happening is, the large players can't launch first. Okay, the small players don't want to launch first. They want to gain growth. So no one's launching. And I think that's actually the only way in which you change the market.
But, do you worry? And we're seeing this the world over at this point in time, including in the mother of, the capitalist markets like the US, where they're talking about breaking up large tech companies because of competition-related issues. So do you believe, while I get what you're saying, that you see this as a perverse regulation, anti-entrepreneurship, anti what you're doing, but do you believe that it's something that perhaps environmentally is gaining momentum?
So couple of things there. I actually don't think it's perverse regulation. I understand the intent.
Yeah.
I think the approach needs more thought. In the West, particularly in the West, nobody is going and saying ChatGPT should not have a lion's share of AI or Gemini can't, as long as neither of them does something to prevent the other's usage. Majority of the lawsuits are in the Google ecosystem or the Facebook one. And they're of two kinds. Facebook is staring at regulation, or not regulation, I think activism around the fact that they bought out pretty much all their principal theoretical competitors.
Yeah.
Right? So they have every major social network in their stable. We've not acquired anything in payments, life till date. We built everything we have, and slowly and painfully, as we just discussed. So that argument here doesn't hold. We've not muscled anyone out using capital. Yeah. And the Google argument, which is now playing out in 50 states and they're paying penalties left, right, and center, again had to do with abuse of monopoly, not monopoly. India had a anti-monopoly law. We removed that in law and took a position that abuse of monopoly needs to be demonstrated, and that lies with CCI.
Yeah.
Because if you don't remove that, you remove any incentive for anyone to innovate. If being the leader of something or being large in a sector in of itself is inherently bad, somebody then publish these leaderboards on day zero so that I know I don't need to actually like go past some number, right? I'd like to believe that we trust our markets and our innovation cycles more than that.
Secondly, I think specifically to UPI, there's no barrier to entry. You still have new TPAPs, apps coming in practically every month, right? NPCI is trying to create a more vibrant environment. It is a completely interoperable platform, which means effectively the consumer is not tied to any specific app, but it's a choice that they can easily migrate from one app to the other. In fact, many consumers have multiple apps.
Fair enough.
So it isn't a monopoly by design or force. It is, first of all, it's not a monopoly. We talk about
a closed loop system.
It's not a closed loop system. It's consumer choice that is ultimately playing out. There is no barrier to entry. You have some of the largest conglomerates like the Tatas entering. You have completely new startups that are getting funded on the back of their play in UPI. In such an environment, it's very difficult to actually see why consumer choice playing out with one or two apps is really a problem.
There's another very important element here. It's not that any of the tech conglomerates in the West are just really large or they're abusing monopoly power. They're China, other markets. I think the activism's coming about because they also have pricing power in the advertising market or in particular like device markets. Who are we charging in UPI? Who's anybody charging? I mean, we are waiting to actually make some money. So I think that
like to charge
central.
But that's gone cold, right? That discussion has gone cold.
I know, but I'm just saying, if the entire industry is saying we need a direct monetization vehicle, clearly the problem is not that we are sort of price gouging. PhonePe is free, GPay is free, the 10th app is free, the 50th app is free. They're all free.
How many do we have, by the way, as of today?
I don't track these, but I know that it's well over 30 at this point. I mean, last I checked, there's more.
There's more. There's definitely more. I think if you put together all the bank apps, you put together the other apps, they're significantly larger, but they're all options. They're all options for the consumer. So there are quite a few apps that actually work on UPI. So it's not a small number at all.
No, it's not a small number. But, I mean, I get the logic of what you're saying. I hope we don't know and we can't preempt whether this will be the logic that's bought by the NPCI and others. But this will be a significant risk factor for you as you go to the market, will it not? Because if the cap does come in, then what happens to your, 46, 48? What is the current market share that you have?
Somewhere in that range. So I think the one thing that's in the circular that is not actively understood, the circular actually doesn't say that we have to stop servicing any customer. They're actually explicit about the fact you cannot stop any transaction. What they're saying is that your new customer onboarding from that date would be stopped until your market share comes down, because the assumption is other people will acquire the new customers. And I think that is part of the feedback that we'd given. If the assumption is that new players or other players can go and acquire these new customers, 9 years in, there should be clear evidence that those remaining 28 people are growing the market. They're just not able to get a lion's share, but even proportionately growing it. If that were happening, this is a non-issue. If it's not happening, then it's complacency that will happen on the other side. So I think again, I'm sensitive to what the regulators' concerns are. Less so NPCI as the network, just given roles, but regulator absolutely get what they want. Right? Nobody likes to see concentration or consolidated in a regulated sector. I understand where they're coming from. I think it gives them some comfort, I know, because we don't hold the money. Right? Money, we are a conduit, we're an application layer. How it plays out, I won't give any point of view because
I think at this point, we just take comfort in the fact that, as Sameer mentioned, our growth in the future may be something that there may be a restriction on if at all this thing comes to pass. but there'll never be a denial of service for our existing customers and users, because that's not something either the policymakers or the regulators intend. They've always been protective of the consumer. So there'll never be a denial of service on PhonePe. So I think that's what we take comfort in.
Well, we'll have to wait, as I said, perhaps till 2026 or maybe before that. We don't know. But, I want to talk about, you talked about circulars, and I remember you telling me this, that, there's a unwritten policy in the company that everybody, irrespective of what role they play, have to go over every RBI circular. And now I would imagine SEBI and insurance circulars.
So when we started out, we had this active policy that rank or file, function agnostic. I think till the first about 75 to 100 people, we made sure every functional employee read every NPCI circular on UPI as it came out, or RBI circulars for PPI. Those were the two things we played in. And I think it was to inculcate very early on, almost indoctrinate the sort of habit of being abreast of guidelines, so that you can't just say, oops, I didn't know. Ignorance is not bliss. Two, making sure that, in fact, if new ideas have been permitted, you can move faster. You can't say, I didn't know, so I was a laggard. That, again, is just poor. But I think, first and foremost, I think tech startups generally, globally, do get a bad knock. You're talking about monopolies, but the other side to it is just mavericks. Right? We like building things, we like breaking things, but not all disruption is good. So I think we just wanted to make sure everyone understands this is a highly regulated space. It's important that we set the tone from day zero. So I think till our second office got filled up, we pretty much used to have these printouts running everywhere. Circular number 24, circular number 25, whatever it was on their website. So
I still think, but a very large part of the payments team, and specifically the teams that work in financial services, agnostic of function, whether it's on the tech side, whether it's on the business side, whether it's on the operations side, are significantly aware of new circular and changes coming in. Because especially at the scale that we operate, the good thing about being completely tech-driven and systemic is that you will be extremely consistent in everything that you do. But if you're consistently wrong at scale, that's a huge issue.
Yes, I would imagine so.
So I think purely from a correctness to adhere to any changes that are happening from the regulatory side, more than even looking at any opportunity that emerges, I think we make it a point to ensure that we are abreast about all these changes. If not everybody reading the circulars, at least in terms of being able to actually disseminate that information as fast as possible and make sure that it gets into the roadmap, into the prioritization. It always is. In our case, anything that is to do with performance of payments and scale of payments trumps any other new feature initiative. The only thing that trumps performance and scale is any changes that are towards compliance and regulatory changes.
I'm curious, since you're talking about tone and compliance, there's 14 guidelines or commandments that you have as part of, what defines values, the ethos and culture and values of the company. Why not 10? Why not 15? Why 14?
So we had a whole bunch of these things floating in ether. And then our CHRO Manmeet came along and said, where is this written? And we said, some in my head, some in his, some in Vishal, some in this one's and that one's in Hemant's. He said, I need this codified. And we got in a room and we realized there's a lot more than 14, by the way, at that point of time. And we debated and argued every one of them. They actually fall into three buckets. I think most people see the 15 or 14. We spend equal amount of time on how we want individuals to conduct themselves, how we want the team dynamics to play out, and everything, including our incentive structures, actually are aligned to making sure you never have a local maximum incentive. No variables, no bonuses, life till date. 10 years, 10,000 people, including us. Just don't. Don't do anything that makes people want to actually get an edge over their neighbor instead of trying to solve for the collective. And the third was as a company. So there's these three buckets. As a company, how will we conduct ourselves? So for example, at a company level, my favorite one is, it's a value that says, we will do positive disruption. So we are a tech company, we are a startup, we will disrupt. But can there be good disruption? And we said positive disruption means we will not sort of take anyone's profits or disrupt a sector just because we can on the back of, say, capital.
Okay.
We will only enter a sector if we think we can grow the pie substantially.
Okay.
Right? And we've said no to a lot of sectors. There's a lot of sectors with decent margins where you can throw money today and pick up. But we've seen this sector after sector. If the sector is overheated, 10 VCs capitalize 10 startups, everyone is in a race to the bottom and nobody is happy. Now, if we did that because we have, say, deeper pockets, that just makes us bigger schmucks. So we don't do that. And we tell everyone, you're not going to go bully. You have to out-innovate. Innovation is key. At the individual level, that will manifest into something like learn fast, fail fast. We encourage people to try a lot of different things. There is no-fly zones like compliance and governance.
Yeah.
Building stuff, if you're not moving fast enough, why are you here? Like, you should do it in a boring old state company. You should try stuff. Build a Indus, build a Pincode, build lending products, like build 50 things.
What's your favorite of the 14?
Mine is actually a combination. I love positive disruption. So we have the one that is there for most of the companies in the consumer tech space, bias for action, which is basically to make sure that you act fast enough and with urgency. We've learned over time that urgency for the sake of it or hustling for the sake of it adds no value. So we have a balancing behavior in that, which is holistic thinking. So we've always been asked this question of how does holistic thinking go with bias for action?
Okay.
The reason we put in that is whenever you think of getting into something, think of it from all the angles, not just from the go-to-market. Think of it from, okay, how will it operate on day 100? When will you actually put marketing dollars behind it? Is there a plan A, plan B, and potentially a plan C to fall back on? Once you actually spend the amount of time to go deep into this new idea or new category or new space, then figure out how do you break that down into milestones and show for bias for action in getting to milestone 1, milestone 2, and milestone 3, right? So the reason we have these 14 is it's actually very bottoms up. It's not just top down between me and Samir and Burzan. A lot of the core group that came in very early, Hemant, who's the CEO for Lending, Vishal, a bunch of us sat together and said, what is it that makes us as a group successful? What is it that we demonstrate as a group? What is it that we demonstrate as individuals? And what are the things that we stand for?
Yeah.
Because if we actually codify that becomes a scaffolding for the rest of the company to actually use it on a daily basis as a framework for decisioning. So I think that's how we came up on these. They were actually close to 30. And
you whittled them down to 14.
We whittled them down to 14. Yeah.
But, as you pointed out, this is not your first rodeo. You've both have been around the block and you've done this several times over. And I want to go back to the Flipkart days and the Flipkart Association, because I was telling Rahul before we started that in many ways, what HUL is to sort of the legacy companies as the CEO factory, Flipkart kind of has done that for the digital ecosystem, has it not? And you're kind of part of that story in many ways.
Flipkart, I think...
over 100.
People talk about the Flipkart Mafia and all the startups that came about. I think
you're part of the Mafia.
I'm saying I don't think people understand. It's not just in Bangalore. I think the change in psyche in 20-year-olds and even late teenagers today, where everyone wants to actually get out there and ride the sort of startup wave and try their luck at building something, being innovators, that fearlessness you see today, which I think we all celebrate. I think so much of it can be mapped back to that one company. And I think the two Bansals, but they also had a phenomenal group around them. They're early believers.
Yeah.
We joined a little later. We were missionaries, but we were late missionaries. They already had a very strong core. I tell people at PhonePe this often. I have a tremendous amount of pride in the talent and our bench strength. But there was a point at Flip where this caliber of the bench strength was actually scary good. Right? I mean, every IIT graduate and every IIM graduate was working there, and every lateral, peak of their career, sort of smart person that I know of. And I think the country, forget markets and IPOs and all this stuff. The country owes companies like that just as much as we do in this generation, just as much as you do for the Tatas for creating haloed institutions. Definitely the OGs in this space. I mean, there's no doubt in my mind.
Right. I think it's the startup university.
Still are.
Equal number of good decisions and bad decisions.
Yeah.
But the fact is that looking back, vision is always 2020. And I think we have that advantage building PhonePe after having seen the Flipkart journey, because there's so many learnings, right? There's so many learnings in terms of, you're talking about incentivization, cashback, use of data, building for scale. I think a lot of us who have graduated from that startup university called Flipkart enjoy having that 2020 vision when it comes to actually building a
We learn
startup
from our
today.
mistakes there. But the boldness to go after $1 billion, I mean, I'm sure you've met both Sachin and me.
Yes.
25-year-old Sachin had that. I mean, the way he used to talk about creating a $20 billion and $100 billion company back then, I'm like, he's either crazy or he's brilliant. Probably some combination. I mean, the first reaction when you meet somebody like that, right?
Yeah.
And you're seeing that now.
Yeah.
There's some entrepreneurs today.
Yes.
They're just so wildly ambitious. It's awesome. So I think
Recently moved to Bangalore.
that's one of many actually. I think that's the, but like the one that moved to Bangalore. I think the world's their oyster, and I think we're all better off.
And all power to them.
Yeah. But and here's what I want, because this is essentially not just a show about entrepreneurship, it's also a show about paying it forward. So what I want to understand from the two of you, of all the lessons that you've learned over the years, over the course of building your previous startups and now building out PhonePe to becoming a multi-generational institution, what are the top three things, yes, fingers crossed, what are the top three things that you would tell a young entrepreneur today, which you believe are the non-negotiables? You draw the sort of red line there.
First time entrepreneur?
Yeah. First time entrepreneur, and then someone who's sort of mid, 5-6 years on and then going for scale.
I think the first timers, definitely, I think integrity/ethics above anything else. If you don't sleep well, it doesn't matter how successful you are, it ends badly. And I don't think they teach that in college enough. They don't teach that in startup university enough, which is why, unfortunately, you just see some very successful people having their first ventures just blow up in their face because you don't know how to deal with success and or don't know when to actually avoid doing too much jugaad or just being greedy, right? So I think that basic amount of integrity is super important. Otherwise, it's not worth it. I think the second is, if you're a first-time entrepreneur or you're below 30, you gotta swing for the fences. Because if you don't do it then, you're not going to do it with baggage later. Or you'll do it on the other side when you have no airline yet, right? So swing for the fences, because I think India's time has come. This is not about whether there's a market you could get to. This is now a connected 800 million people market with all the infra and the capital available. So if you don't aspire for massive and global today, you're not even playing the game. You're playing the wrong game. So I would tell anyone between 25 to 26, 27, swing for the fences. You can, because you can do it multiple times over.
Yeah.
I didn't know that coming in. I started my first venture at 29, 30. 29, 30?
30, 31,
Yeah, I mean, middle class, go to school, go to grad school, work.
4G kid.
4G kid.
Were you a 4G brat, though?
I was a 4G brat.
He's still a brat.
I'm still a brat.
He's still a brat.
But the idea of quitting your job and working in a startup was such a pain when I worked in my first startup. That if I told my parents I want to actually start up at 21, my dad would not know how to react, right? Whereas today, if my kid told me that I want to go and work more than a year or two, to apprentice, I think that's important, but said, I'm scared of starting up, I'm like, dude, I'm throwing you on the deep end of the ocean. You gotta try. So I think that's number two. If you're young, swing for the fences. You can do it in a startup. I'm not saying you must start up, but I'm saying you must try something disruptive. Push the envelope. And I'd say the third one is, you really got to be clear about why you're in it. I think in India, making money is still a dirty word at some level, whereas when you're young, sometimes it's just change in lifestyle that you're seeking, and that's okay. But somewhere along the way, you get trapped in that rat race, and actually your priorities change, and everyone's still telling you to chase it. So you got to know at different stages of life. I think our motivations when we started PhonePe were very different than we started mine. Very different stages of life. So I think you got to know that.
Rahul?
So for me, I think for the first-time entrepreneur, I think hustle is great, but hustle with the right goals and right intention is very important. I see a lot of entrepreneurs engaging in busy work. That's more activity, but not really work that is leading up to something, right? The sense of working day and night through weekends should add up to something, and you should be clear about that outcome and not just do it because you think that's what a startup means. I think that is very important. The second one is this chase for valuation and your first raise being a really large raise. Most don't know why you're raising, how much you're raising, and
what you want to use it for.
What you want to use it for.
That
and once you have
question.
the money, then you start chasing growth to justify that and justify your valuation, which leads to the next round. And that's a spiral to death.
So chase demand, not growth.
Chase the right product. Solve the right
desired outcome.
Create the value proposition, and then say that now I know what's the value proposition I want to create, and this is the kind of money it will take, and the valuation will emerge. Right? I think that's the right way to look at it. And the third one, I think this is more for after you're few years in to build a certain level of strong conviction in what you're doing. Many times, especially in a hyper-competitive market, you do react more than act on your conviction. And I think it's very important to find that balance. The more you keep reacting either to competition or to changes in environment or volatility, you are ending up veering away from the path that you have chosen, and over the last few years, you have built a conviction on. If you have that conviction, things will change. You need to actually find that right balance. Pivoting for the sake of pivoting never really works, right? So I think if you pivot because you've analyzed internally with all the signals that you have that you need to pivot versus you're reacting to market, it's very, very different. So having conviction in what you're doing, extremely important.
You know, since we're talking about competition, I want to understand from two of you. Samir, I'll start with you. How do you look at competition? Do you look at competition from the perspective of focusing on your competitors' strengths or your competitors' vulnerabilities?
Definitely not the vulnerabilities, because that's a perverse game, right? I think even on the strengths, I think we definitely look at whether they're innovating in interesting ways.
Who's innovating today, to your mind?
I think shamelessly, I think in our sector over the last 10, 15 years, the most innovative by far and away has been Paytm. And we talk about this. I think it's fair to say that.
Yeah.
They brought the wallet to market. They got the QR to market. They got the soundbox to market. They've done a lot of things. I think that's perfectly all right. Like, I should be able to say that my competitor is actually very innovative, right? I think Cred got gloss to design. It's glossy. It looks like really polished. I think each of our competitors, there's certain things that they do better. BillDesk is the OG in payments for 20, 25 years. They've gone into the hardest work in the entire sector. They've gone and taken state utilities and digitized them, right? So huge respect, because we all benefit. There's no BBPS if there's no BillDesk. Simple.
Yeah.
So I think you have to first respect what their strengths are. You have to acknowledge the innovations, and you should shamelessly say that I'll create a variant of it if I think I can do better. Or even just try and actually sort of create more of the same if there's a market out there for two brands. That's fine. I don't think there's any shame in that at all in business. I think exploiting their vulnerabilities, generally speaking, unless people come at us, we never go at people.
Have people come at you?
Well, several times. I think it's just opportunistic at times. And I think, again, that's part of the tech sector, unfortunately, or maybe it's across sectors. I think it becomes at some point so competitive that people forget why they started the game, and it just becomes sort of a dog-eat-dog kind of a market situation. So we've seen it. I mean, there's good actors in every market. There's some very respectful competitors, and there's the bad apples, and we've seen both.
You know, at the end of the day, it's also about people, right? I mean, you're building stuff, but you're building with people that hopefully you enjoy working with. And the two of you have spent, a good part of the last 30 years together. So what has that been like? How has the relationship evolved? Do you sort of, who plays what role in this relationship? Who's the counsel? Who's the sort of, the more ambitious one? Who reins who in most of the time when things go a little out of hand?
I actually think we balance each other out really, really well. I think there's areas where...
He's the yin to your yang.
Yeah, no, I think there's areas where he's more ambitious. There's areas where I'm more ambitious. there's areas, I mean, I think he counsels me and slows me down more often than I do the reverse. I think he's more thoughtful. But I think what keeps us going is, and I think our leadership team, which has been together, knock on wood, for a long, long time, I think we all spend the required time to actually discuss what we hold sacred, personally, culturally, ethically. So I think when your moral compass and how you go about decisioning is identical. I'll give you a simple example. XYZ situation happened, human error. Do you fire somebody? Do you give them a warning? Do you reward them for coming up? Right?
Yeah.
3 parts. If there's one founder, what you say becomes the tone. If there's 2, and these things are playing out in real time, if you get different answers from founders depending on whom you got to, you introduce politics without realizing it. I think for us, what's crazy is I think we know how the other thinks, and regardless of that, we also know there's very high convergence. So either of us can answer that question the first time it comes up, and I think there's a core team that's been around for so long that you can walk up to any of them, they'll tell you how we think about something. I think that keeps us going.
I think the most important thing that we have between us is trust, right? And I know it's a cliched statement, but it's extremely important. We have our holy fight sometimes. We disagree on a bunch of things.
What's the thing that you disagree on the most?
Oh, so much. But generally in terms of what we are building.
I think in many things. It could be on product, the approach to product, how we are looking at it. It could be in terms of utilization of data, whether we are using it for a particular purpose in the right way or not. There are a bunch of things that we may disagree on. But once we actually agree to move forward in a particular manner, we are all in. We never actually question each other. And I think that's reflective even on the team. The team also operates in a similar manner. Over time, what we have done, I think, is tried. So we are very complementary in terms of our functional skills. But over time, we've actually developed a significant, not just appreciation, but understanding of each of our roles so that we're able to actually step into each other's shoes very easily. As his role becomes more and more external facing and he has significant demands on his time, I'm able to actually fill in on his role inside the company. He, in fact, can be an excellent CTO for PhonePe. He gets tech pat down. I mean, he won't agree, but he's actually an excellent engineer. So I think what we've done over time is move from just having complementary skills to actually try and be as interchangeable as possible. And the third one is, like you mentioned, one of the things that we do take seriously between Samir, myself and Burzan is to hold the mirror to each other. We never shy away from actually having a discussion about why we don't think that this is going in the right direction or
so
any decision that's been made.
I think there's a very deliberate and vocal attempt at transparency at all costs. And it makes people very uncomfortable to begin with when we tell people that you got to put it out threadbare, any topic, discuss it, motivations, what drives you, why is this happening, in any context. So what that does is it puts people out of their comfort zone. Okay, that's the negative. But it allows you to go to the nub of the problem and really solve it. Much faster. As organizations scale, they lose that, right? I mean, startups don't have time to BS around. Large companies have all the time in the world to BS around. And managing upwards and downwards is actually like, there's careers developed around teaching people how to develop careers on managing up and down. Like, you don't want that crap. You want to build. So we fight on whether the color and font of the bento boxes is right. We still fight over that. He's like, this damn thing is too light pink and I don't like those corners. And like, we go at it. Sometimes we scare the natives, so to say, right? But I think they do the same as well. And it's when you see people fighting passionately about whether the smart speakers colors are right or the font is, the icons are big enough. When you see those fights happening in the corridors, you know something's right.
Everything is a healthy debate.
Healthy debates.
And as long as the intent is towards taking the company forward, the product forward, right? Yeah. It's all fair.
It's all fair. So clearly, who's the maverick and who's the goose, since we're talking about the wingman?
He's the maverick.
You're both pointing at each other. Who's the maverick?
I could go with the movie shot, but that was a little... I'm sticking with this finger.
But, what is it that we will not see on PhonePe? You've given us a glimpse of what we could possibly in the future see on PhonePe. What would we not see on PhonePe?
It's never say never, but I can give you an example of what you haven't seen so far on PhonePe, just to give you a reflection of how we look at things. Cryptocurrency, right? There have been many times at which whether we create our own crypto, whether we distribute cryptocurrencies has come up. One of the things that the reason we've stayed away, apart from the fact that RBI has been very clear about their position on crypto,
unequivocally, they hate it.
But there's a legal representation of crypto that still allows it to operate and exist and trade.
And be taxed.
And be taxed, right? We believe that the way crypto has been positioned and interpreted by a large set of the population as being an investment vehicle, many times marketed as safe enough to actually put in and grow your money, putting something like that out on PhonePe at the scale that we've operated at would be just socially wrong. Right? And that's why we've never actually taken a view that we would never put crypto out on PhonePe. Irrespective of whether the regulator...
are just straight up Ponzi schemes. You just don't want to touch that.
Even if the regulator said it was okay, the way it's been positioned, like I've been on a cab driver, I was talking to the driver and he was saying that he's moved his money from the chit fund into crypto, where chit fund is actually... You may have a view.
This only happens in Bangalore, right? Chit funds to crypto in a cab drive.
But he thinks it's safe enough to actually move into crypto because he's seen that suddenly there's been a run-up on that, and we'd not do that irrespective of whether we'd be able to make a lot of money distributing crypto or even creating our own cryptocurrency. So I think there are things like that where we draw the line and say that both from the role that we play, the trust that we have built with the consumer and the scale that we operate at, there is a no-fly zone of certain products that we'll not distribute. Yeah.
So what could we possibly see on PhonePe in the future? You talked about global ambitions. I mean, you've got partnerships across 6 countries at this point in time as far as UPI is concerned. What is the global ambition? Because I know it's made in India by Indians for India largely. It's an India first ethos, but do you have global ambitions?
Absolutely. So today, Indians traveling to those UPI peer countries or partner countries can spend, if they're traveling there.
Yeah.
We will definitely, for the core payments business, we will definitely venture out and start building operations in other markets. I think we publicly already announced we are entering the UAE. We are going to be entering Singapore.
The IPO side of the brain is working overtime.
All these birdies trapped in my hair. I don't have hair left, right? So it's like, so we are applying to enter the Middle East. We are applying to enter Singapore. For right now, that's all I know I can share. But we absolutely do believe that certain products that we've developed will find appeal in consumer markets or even merchant markets in other geographies as well. Yeah, it's India's time to build for the world.
So how soon can we expect PhonePe to build from India for the world?
Ask the CTO.
Now he's pointing a finger at you.
When it comes to timelines, he points at me. Yeah. But I think we just applied for the license. We'll have to actually wait for the license approval. And as and when that comes in, we'll be able to actually offer a timeline on when we go international. Yeah.
Okay. So it's been a pleasure speaking to the two of you, and we wish you the very best of luck with all of PhonePe's plans and, of course, your journey to Dalal Street as and when it does take shape and when it happens. But, are you going to give us a broad timeline before we let you go?
I'm getting better. I'm learning. No.
Well, but thanks very much, Amir, and thanks very much, Rahul. We wish you both the very best of luck, and thanks for having us here at PhonePe.
Thanks, Shereen. Thank you so much.
Well, with that, it is time for us to wrap up this edition of the Young Turks podcast here from the PhonePe headquarters in Bengaluru. From all of us here on the team, for now, goodbye. Thanks for watching. Stay tuned to CNBC TV18. There's a lot more coming up. For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.